Hey folks, CA Rachana Ranade here and I welcome you all to a very interesting video. I'm sure after watching the thumbnail, you definitely have this question in your mind that markets are almost near all-time high, and every single time markets, the moment they're trying to cross that all-time high mark or they're going closer to 22,100, there is some pressure on Nifty. It is struggling to go way past that, and that's where one question which pops up in our mind is that, is this the right time to book profit, or I may say that, is this the time where I should reallocate my portfolio from equity to some other investment avenue which gives me fixed return? Second thing is that, if that be so, is there any investment avenue where I can earn up to 9.5%? If you want answers to all these questions, keep on watching the video till the end. Now, to go back to our question, when we said that, is this the right time to book profits or not? For that, obviously, we have to do a technical analysis, right? Just in case if you want to understand the rationale for technical analysis, what do we mean by that? We try to analyze what has happened in the past and then we try and understand what could happen in the future. Is this a guarantee that this will happen in the future? No, but based on our studies, we can say that yes, there is a probability that this may happen. And for that, have a look at this. Now, right now, I am on the Nifty chart. I've taken the time frame as a weekly time frame. Okay, so some interesting analysis you can see here. I'm taking the COVID lows, right? So from here, there was a big flag and pole pattern. Of course, I'm drawing just fatafat say, so it will not be that accurate. Okay, of course, it could have been drawn something like this. Okay, then again you can see that yes, from here there was again some up move, and then we saw again some sort of consolidation here. Correct. Again we saw some up move. Again we saw some sort of consolidation here, and post that again we saw some up move, and this part, this is yet to happen. But if the previous chart patterns or previous patterns were to actually repeat, if history were to repeat, there is a probability, there is a chance that we may enter some sort of consolidation. Simple till here. Now, other than this, is there anything else that we can support our analysis with? So for that, what we could do is we could analyze what happened back in 2019, because that was also an election year. So we'll try and analyze what happened from February, that is the pre-election phase, what happened during the election month, and what happened post-election. And then we'll try and see that if history were to repeat, what could happen again in 2024. And for that, have a look at this. So right now, I'm on the monthly chart. And what I've done is I've drawn two vertical lines. One, February 19, because right now, as I shoot the video, we are in February 24. So I'm going 5 years back exactly till August 19. So this is what? This is a 6 months time frame. So February ka month, from the end if I count, March, April, May, June, July and August. 6 months time frame is what I'm checking. So if you see here, the closing, so what happened after February, we can see here March, April, May. In total, it went up by almost 7.7%, 1% and 1.5%. But followed by which, so May was the election month. Followed by which, what happened? We saw a profit booking in June, 1% roughly. Followed by July, minus 5.6%. And followed by August again, minus 0.85, almost 1%. Now, if you see here, where did February close? February closed at 10,792, roughly 10,800. And where did August close? August closed at what? Roughly 11,023, 11,000. So barely 200 points move in a gap of what? In a gap of almost 6 months. Now, I'm sure you have this question that should I wait in the market for just a 200 point rally for 6 months, or is there any other investment avenue where I could reshuffle my portfolio? What are the options? What should I do? Am I a trader? Should my strategy be different? If I am an investor, should my strategy be different? All these points are going to be covered in the next section of the video. Now let me go into the teacher zone again and let us understand who you are. What is that? KYC? No. It has to be KYS. Know yourself. Who are you? So there could be 2-3 types. Possibility number 1, you are an investor in the stock market. Okay. Possibility number 2, you are a trader in the stock market. And possibility number 3, you say, no stock market. I love to invest in securities which give me fixed return. Okay. So I'll put you in the others category. Okay. No intent to hurt you. Okay. Just others category. Okay. Right. Now, if I'm talking about investor, there could be again 2 types. Okay. One set of investor. Investor, what is the mentality of the investor? Investor's mentality is that, what are you saying? Time to book profit, this, that. We are here for 5 years, we are here for 10 years. So market ups and downs really don't bother us. Okay. So for them, this question itself is invalid, that whether it's a time to book profit or not. But if I'm talking about an investor who has some idle cash, who has some idle money basically, okay, and that investor feels that instead of putting some more money in the market when the market is already at an all-time high, where should I park this extra money? This is one question that an investor can face. No idle money or no idle cash. In that case, nothing is to be done. Carry on as it is. Simple to clear. Now let us talk about a trader. So understand, what I feel is that even if you are like a hardcore trader, ideally, I'll tell you my thought process, that 100% of your money should not go into your trading capital. Okay, as an example, I'm telling you, let us say somewhere around 80% of your money is your trading capital. Okay, balance 20%, this is just an example, the percentages could vary. Balance 20%, you should focus on generating income or generating returns which are fixed in nature. Okay, now this person is like, okay, I understood, but if this be so, where should I invest? Simple. And for others who are anyways interested in fixed income securities, or I can say in investment avenues which generate fixed returns, where should I invest? You'd be like, where should I invest means what? Is there any investment opportunity which can give you up to 9.5% returns? Interested? For that, have a look at the next section of the video. Well, I hope by now the answer to your first question, whether this is the right time to book profit or whether this is a good time to reallocate your portfolio, this part is clear. Now let's come to the second part, wherein I'm going to discuss whether there is any investment opportunity where you can earn up to 9.5% returns by investing in FDs. And for that, I'm going to take you to a website which is of Wint Wealth. I'm sure you might have heard about this brand on our channel, and this time I'm going to talk about how can you invest in FDs through this website, and of course the link is there in the description box below. So what am I going to do? I'm just going to click on start investing. First you'll have to enter your phone number. So I just inserted one pin. Now here you can see, okay, there are you can explore FDs, but right now let's talk about Unity Small Finance Bank, where you can earn up to 9.5% return, and that too with a minimum investment of just 1000 rupees. Okay, so now if you just click on invest now, what you will see is you will understand about Unity Small Finance Bank. Whatever deposits you are making here, they are insured by DICGC. Now question is, what is DICGC? It is Deposit Insurance Credit Guarantee Corporation. But is any amount insured by DICGC? Answer is no. An amount up to 5 lakh rupees is insured by DICGC. 5 lakh per person per bank. Okay, simple till here. Now let us also understand Unity Small Finance Bank. Need I know a little bit more about that? So again, on the Wint Wealth website itself, here you can see this is regulated by RBI and this is a scheduled commercial bank. Okay, fair enough. Plus it is also mentioned it is trusted by 10 lakh plus customers, and here also it is mentioned that DICGC insured. Okay, fair enough. Now if you see here, if I were to compare that why Unity ka FD, what about other small finance bank or other available options? I don't think I need to even say about this. You can very clearly see that amongst the peers which you can see on the screen, this has the highest FD rate, right? Now, if I were to open my FD, I'll have to first check what are the different options which are available with me. Can I change the investment amount? Yes, it is up to you, whatever investment amount you want to put here. Now, if you see here, if let us say if I'm talking about a senior citizen, and if I check senior citizen, here you will see that up to 9.5%. So 9.5% is the interest rate, but this is a specific duration. This is 1001 days only. Okay, so this is a special time frame ke liye 9.5%. But of course, if you are not a senior citizen, you will uncheck this, the rate will drop down to 9%. But you'll be like, Rachana, we were talking about 6 months, right? You were talking about booking profit. If that be so, 6 months it may be sideways trend. Why are you talking about 1001 days? Question is, can we customize tenure or not? And for that, I'm going to click here on customize tenure. Let us say I input 185 days. Okay, I'm specifying again 185 days. Here you will see you will get a rate of interest of how much? 8.75%. Fantastic. And what if you are a senior citizen? If I click here, it is 9.25%. Of course, I'm not a senior citizen, so I'm going to uncheck that and I'm going to click on open your FD. Now it says just 3 steps KYC to unlock interest rates like never before. Now what I'm going to do, I'm going to complete the KYC first, and I'll click the KYC here. I'll have to fill in my personal details, which I'm going to do. Then I'm going to click on PAN and Aadhaar verification. Then a video KYC will happen, and once that is done, then we will proceed with the actual FD investment. Now in the memer style, I'm going to go like 5 minutes later, When I've completed my KYC, I have again come here, and now again I'm going to click on invest now. I'll just put the amount. I will customize the tenure, and I'll click on open FD. Now it will say complete FD booking. It will say which account do you want to use, and it says UPI is recommended. So I'm just going to click on UPI, and I'm just going to click this, okay, and say proceed to payment. I'll click on show QR code. क्या बात है? It says congratulations, your payment is successful, and it says okay, FD booking request has been received successfully, and it says FD will be booked automatically once the funds are credited to your Unity savings account. It may take 1 working day according to interest and tenure. Okay, isn't it that easy? It's done. Now let's go to last 2 points. When number 1, if you need funds before 185 days, then what? For example, if you were to premature the FD, then what? And second, are there any risks associated with this FD? So we are going to understand both the points. First, let's understand about the premature FD scenario. For that, have a look at this. I've just drawn a basic simple flow chart so that it's easier for you to visualize. What if you premature the FD within 7 days of booking? Answer is very simple. You will not get any interest, but whatever amount you have invested, whatever principal you have put in, you will get it back. Okay, simple. What if you premature the FD after 7 days of booking? It says you will be levied with a 1% penalty on interest applicable for which deposit remained with the bank. So it will check for how many days had you kept the deposit, what is the interest rate for that specific tenure, and from that interest rate 1% will be deducted as a penalty, and principal plus whatever is the interest will be credited to your account. I hope this is simple and this is clear for prematurity. Now let's proceed to risks associated with this. Now for risks, there are 2 types of risks that you have to understand. One is called as a default risk and one is called as a liquidity risk. What is default risk? Basically, it's something where the bank or the financial institution goes bankrupt and it is not able to repay your amount to you. Okay. If I'm talking about your FD with Unity Small Finance Bank, is there a default risk? If you have invested amount, let us say something about 4 lakh rupees, and even if you are, let us say, interest and all that put together, all in all, in simple words, that amount is less than 5 lakh rupees. Okay. If you remember, I have already told you, is it insured by DICGC? Yes. Then is there any default risk? No. So even if, see, this is like a worst case scenario we are discussing right now. Okay. So in the worst case scenario, if something goes wrong with Unity Small Finance Bank, still it is guaranteed by DICGC up to 5 lakh per account, per person. So sorry, per bank, per person. And in that case, what will happen is that default risk will go down to 0, up to 5 lakh rupees. Okay. Question is, what about liquidity risk? Okay, agreed that yes, amount is insured, this, that. When will I get my money back if something were to go wrong? For that, let us go back to Wint Wealth website. This says that deposits up to 5 lakhs, we have discussed about this, but amount will be processed within 90 days if the bank defaults. Very clearly mentioned on the website that even if the bank defaults, money will be processed within 90 days. With this, your liquidity risk is also mitigated. So I hope you have understood about the risks involved as well. Now comes the $1 million question. How much should you invest? Simple. I'll tell you my thought process. Whenever I'm trying a different investment avenue, if I've never invested in that investment avenue, I don't start with the maximum amount. I start with an amount which gives me mental peace of mind, which is above everything else. Okay. If I feel that I'm, very much at peace of mind with an amount of 4 lakhs, I will invest that. If I feel 4 lakh pagal ho gaya, I'll invest with 1 lakh. No problem. One can start with 1 lakh. If you say 1 lakh, I'll start with 10,000 only. No problem. Minimum investment amount is 1,000 rupees. So in fact, I will tell you that if you are going to try this for the very first time, first see the process, go through it, invest whatever amount you are comfortable with. Once you are sure, maybe next time you can go with a higher amount. Well, this is where we had started with these 2 questions, and I hope you have got the answers to both these questions. So if you want to invest in Unity Small Finance Bank's fixed deposit using the Wint Wealth platform, then you can check out the link of this platform in the description box below. I hope you enjoyed this one. Do share this information with a lot of your friends. So don't forget to share this video. Don't forget to smash the like button. I hope you found some value in this video. Till then, take care. Jai Hind and bye-bye.